All right, welcome back. Today, I'm going to be talking about a stock that I've actually been interested in this week. So I got ticker symbol QQQI. So I wasn't really familiar with this stock before, and then it got brought up, and I was interested in it. So I kind of deep dove it a little bit, and honestly, I'm kind of thinking about adding it to my portfolio. So first, you might notice the name, which is NASDAQ 100 High Income ETF. This is another one of those really risky stocks, as you might be able to tell. And if you look over here, you'll see a 14.24% dividend yield. It's kind of like, oh, great. Another stock that's really high yield and probably really high risk that I'm looking into. And you would be correct. This is another stock that I'm actually kind of interested in, and I'm very close to adding it to my portfolio. And there's a couple of reasons for that. It's not just because of the dividend income. It's because of a couple other reasons. Obviously, the dividend income is part of the main draw into this. But there's more to it than just that. If it was just the dividends, and I didn't actually believe in it, then obviously I wouldn't invest in it. Like I've mentioned before, there's a bunch of stocks that'll have these really crazy high dividend yields, but they don't have anything that's drawing them to actually like increase those dividends or actually provide other forms of growth besides just dividend income, while also just decreasing their stock price to where they eventually just become zero and you get absolutely nothing from this dividend. Now, you might be saying, if you saw my last video, well, you're in what yield max stuff, so you're literally investing into what you said you're not going to invest in. I have hope, okay? This is also going to be another monthly payer with insanely high dividend yield, and it's going to be another covered call strategy ETF sort of fund where they're going to distribute their earnings to their investors, similar to what YieldMax does and kind of like JEPQ. And from the name, you can see it says NASDAQ 100. So they're kind of doing these covered calls on the NASDAQ 100 index. So kind of betting with that. Again, I'm nowhere near retirement, so it's like I kind of want more than just the dividend payout every month. Especially with 14.24. There's got to be more to it than that when it comes to something like this. And that kind of comes with the potential for the stock to grow. Now, when you look at this is the all-time graph. They started in February of 2024, so it's a very young stock. We have no idea what's going to happen with it, which is kind of why I kind of want to hold a little bit, kind of do some more research on it before I even put any money into it, because I'm very close to putting money into it. But you'll kind of see, it started in January 2024, and since then it reached an all-time high 54.32. Not insane growth, I know that. But there's a couple of reasons why I believe that this might actually have some growth to it. With a lot of other like high yielding closed call ETF funds that offer like insane distributions, those ones are going to offer overwrite basically 100% of the portfolio, while this one only does 50% of the portfolio, which allows it to capture more growth potentially, especially during bull markets. And really, with this 50% overwrite, it's really supposed to help with the overall total return percentage. Like, basically what's the total return going to be like? It offers better odds of that happening, of having a better total return percentage. And again, you are sort of investing into the NASDAQ 100 with all the big tech stocks like Microsoft, Apple, Google. You're kind of getting that exposure, although it's not like actually investing into the actual NASDAQ 100 index where you're going to have that exact exposure and just growth potential like that. This one's going to have, you're investing into those stocks kind of, while also gaining an income distribution every month from this stock. And as you can kind of tell here, there are some pretty good swings with the price. It goes from like 52 to 47. And even here recently in April, we saw 42.51, which is where we had that huge drop in the stock market. Everyone was freaking out. And then it kind of came back a little bit. And this, again, is also kind of highlights its other potential for the stock, which is going to be, it's going to have less volatility than the NASDAQ 100 will. Or, with QQQ, which obviously QQQI, we can compare those to QQQ with how it does. As you can kind of see here, you start looking at the 6-month chart here, and you see that QQQ is going to be a little bit higher here, a little bit lower here. And QQQI is going to be kind of the middle line whenever there's a bunch of these changes here. And even now, as you see, it's down -3%, and QQQ is up 2% because, again, this tracks as QQQ tracks the NASDAQ 100. It's going to have more volatility, which is what we're seeing here. Whenever there's growth, it's going to have higher growth. But when there is like a downfall, you'll see that QQQ generally has a worse kind of fall than QQQI will. But also, QQQI will not have as many gains as QQQ will. And again, that's going to be because, we're doing closed call ETFs. We're focusing on the actual income distributions rather than actual just stock price growth. Yeah, basically, this is going to be a lot for people who are looking more for like the income side of things while also being able to track the NASDAQ 100 index a little bit. Because it's like you just saw in that chart, it's not going to track it completely. It's not going to be like, oh, it's going to move with the NASDAQ 100. It's not going to do that. It's not going to move as much. You're going to be leaving out some returns from that, like capital growth returns, basically. You're exchanging that for income, like income now into your account, basically. So like really, you're going to be missing out on a lot of like strong market runs, basically strong bull runs that happen in the market. You're not really going to capture those. You're going to get a little bit of it, but you're not going to see that full potential. You're getting that potential in the dividends, or I guess distributions in this case. There are some like arguments based on how tax efficient this is. A lot of people are saying this is really tax efficient because of how it's classified when the distributions come out. But if they're not classified, if their capital is like capital gains or anything like that, then they might not be as tax efficient. So I kind of see things from both sides. So I'm not really sure about how tax efficient it is. I would have to do some more research on that. But I see arguments that like, oh, it's more tax efficient. Then I also see people saying it might not be as tax efficient as people are saying it is. We're going to kind of hop onto like, why do people dislike it? Because I've already said a lot of things that I like about it. What about things that are disliked about this? Again, I pointed this out earlier. It's very new. It's a very new stock, very new ETF. And we don't really know what's going to happen with it. Like we see that there's potential with it. But again, with it being new, you can never be certain. I mean, you can never be certain on anything in the market, but with this, you can just never really be certain that it's like, oh, this is gonna go up or grow. It's gonna sort of give you some of the growth that the NASDAQ 100 index is gonna have. We don't really know. We do see that it kind of tracks, from what we saw with the 6-month chart, even the 1-year chart, it tracks really closely with the NASDAQ 100, but it's hard to tell, and that's just part of the risk with it. And finally, with it being closed call ETF, with these sorts of distributions, they're going to be volatile. It's not going to be consistent. We can even kind of see this here. We see 62 cents, 61 cents, 60 cents. It's going to be around like the 60-cent mark. We also see it fall down into 53 cents here back in April. April 22nd, we see it went down to 53 cents, 58 cents, when it pretty much had almost a year of just straight 60 cent payouts, and then it just randomly dropped to 53 cents. So there is that volatility of putting yourself up to, but, as we kind of see here, it's still consistently pretty high, and then in the next month, it went back up to 63 cents. It's not really showing signs of like complete decline in terms of the dividend, but again, it hopped right back up. And we'll kind of see what happens with this next month. It's estimated that it's going to be 62 cents, kind of hop right back up to that 62 cent range, or that 60 cent range that we've kind of seen historically with it. And for me, if I do hop into this, honestly, it would probably replace one of my yield max funds. Although the yield max, it does provide a lot of income. It's just like, it's scary knowing that they consistently kind of go down, even though I believe that the distributions are going to outweigh the price going down, and with DCAing as the price sort of goes down a little bit while also getting those distributions, I do think it's going to outweigh it. It's still a little concerning. And going into QQQI, there's this 14, almost 15% dividend yield coming in while there is this potential of growth. So it's like both of these are very new stocks, very new ETFs that are coming into the market, and one has potential of growing and has shown signs of growing, and matching what the Nasdaq 100 index does, even though it will have a much worse distribution or dividend yield. I still like the risk I'm getting myself into, as well as the payouts I could potentially be getting myself into as well. Which at this time, I think it said about it would be $7 a month basically, or I guess we did see that it was about 63 cents per share. And right now, if I were to get it, it would be about $200 into it, almost 4 shares, $28.80 per year, which again is nothing compared to what Yield Max does, which brings me up to about like $300 a month, or not a month, a year. This is something that's still gonna provide ample growth in my portfolio. But yeah, let me know what you guys think about this. I'm honestly thinking about switching maybe like NVDY and putting the QQQI in there, because I want to keep MSTY. I still want to have like 2 Yield Max in there, but then switch out one of them with QQQI. I don't know yet though. I've really got to sit down and think about this. I just want to put this out there. This is something I'm looking at, about potentially switching out with one of my Yield Max funds, because I really don't want to add another stock into this, make it 11. 11 holdings when I could just stay at 10 and just remove one of the Yield Max funds, when I think this is going to be something that's better for me. So I don't know. Let me know what you guys think, and thank you guys for watching.